Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks follow Wall Street lower as China ramps up support for the yuan. Traders now betting the Fed won't cut rates before July. We're going to get minutes from the central bank later today. Samsung gains after a vote of confidence from Nvidia's CEO. That's despite a profit miss. Jensen Huang tells us he's ready to meet US President-elect Donald Trump. And Trump lets loose on foreign affairs, threatening to absorb Canada, seize the Panama Canal and take control of Greenland. Well, after the tech leg gains of Monday, it was the tech leg losses of yesterday, fueled by stronger data and a pushback in terms of market expectations as to where the Fed lands with its next cut. As we said in the headlines, now not fully priced that next cut until July of this year, the second half. European futures pointing lower then, 0.2%, taking the baton from a miserable session over in Asia and the weakness that came through in the US with a drop of well over 1%, 1.5% for the Nasdaq 100 and over 1% for the S&P. FTSE 100 futures are currently flat. S&P futures looking to gain 0.3% after the losses of yesterday. Nasdaq 100 futures looking to add 67 points, up 0.3%. Big losses coming through from Nvidia in the session yesterday as well. Let's flip the board and have a look cross asset. 467 right now on the benchmark US 10-year. Yields rising across the curve yesterday on that stronger data, ISM services data and the JOLTS survey as well. So on the jobs front and on the service front, pointing higher inflation as well. The prices paid within ISM services coming in above expectations. So you saw a sell-off again in treasuries. Right now moderating on that front. Euro dollar at 103, up 0.1%. Bitcoin back below 100,000 and Brent 77.56, up 0.7%. Reports around inventories shrinking in the US. Let's cross over right now to Asia. Standing by for us, Avril Hong in Singapore.
Yeah, Tom, we're seeing Asia stocks on the back foot, reversing gains from a day ago, which were fueled by the chip makers. Today, no thanks to the poor Wall Street handover, those steep declines on Nvidia. This is the picture you're seeing, but losses were really accelerated following a joint briefing from Chinese authorities. They unveiled a boost to consumer subsidies, but it really wasn't enough in the way of a big bazooka-like stimulus impact. And we actually saw the stocks actually sink deeper into negative territory. A fair bit of a recovery, bouncing off session lows now. Really interesting to see. Flip the board. As I say, the focus today is quite squarely on the chip makers, and TSMC is the big drag on the benchmark, tracking Nvidia's losses. The gainer and the big boost to the region's stock benchmark is Samsung Electronics, and this is despite a profit miss. Things are looking on the upside for the South Korean chip maker thanks to Jensen Huang. That vote of confidence, as you say, expressing confidence that the Samsung company might be able to kind of iron out its technical kinks as far as its high-end memory chips are concerned. As you know, it has been struggling to get Nvidia certification for its most recent products, and it's been splashing out a lot of money in ways of research and development just to catch up with its much smaller rivals such as SK Hynix and Micron. Flip the board again. I wanted to put things into further perspective for you as far as Samsung stock is concerned, because despite that profit miss, we are also seeing it narrowing really. And this is, some analysts have pointed out, element of how these factors that are dragging the stock are already out there. We already know about how there's weak China demand, there's struggle within its mobile division, the management reshuffle, its disagreements with workers in the past year or so as well. These are known factors. So from here on out, there are that bit of optimism that earnings could recover. Flip the board again, take a look at how we're seeing currencies faring today. It's not just the decline in stocks, as the greenback strength shows no signs of abating. This is against the backdrop of the signals from the Federal Reserve. The Chinese yuan weakness also compounding the losses in Asia's currencies. But of course, this is also after the uncertainties coming from Trump's policies that's also fueling the strength in the greenback, the declines in Asia currencies today. Tom.
OK, Ava Hong in Singapore with a market check there, talking about the uncertainties coming from the Trump policy agenda, and we'll get more details on that now, because Donald Trump's foreign policy plans are in the spotlight. This after a freewheeling press conference where the president-elect threatened to use economic force to make Canada a part of the United States. He also said he would rename the Gulf of Mexico as the Gulf of America, and declined to rule out using force to seize the Panama Canal and Greenland.
Can you assure the world that as you try to get control of these areas, you are not going to use military or economic coercion?
No.
And
I can't assure you. You're talking about Panama and Greenland. No, I can't assure you on either of those two. But I can say this. We need them for economic security.
And Panama has already vowed not to give up the shipping canal, while Denmark says that while it welcomes US investment in Greenland, the world's largest island is not for sale. Let's bring in opening trade anchor Kriti Gupta on what we've been hearing then from incoming President-elect Donald Trump. What stood out to you, Kriti?
On the laundry list that, of course, you already mentioned. Well, he also, in addition to the things you mentioned, talked about NATO defense spending getting up to 5% of GDP. And that's a level that even the United States hasn't hit, despite their massive investment in defense and in arms. Isn't a level they've hit since the 1980s in Reaganomics. That may change under Donald Trump. It was a big part of his campaigning. It certainly has been a big part of the Republican agenda, and especially this big bid from other kind of European countries to get their NATO spending up to get to that 5% level and boost that. But it hasn't happened. And 5% of GDP is asking a lot out of a fiscal budget in the U.S. and in Europe that are both already fairly stretched. So that was the one that stood out to me. But some pretty large claims there in terms of what he can do. The Gulf of America, I thought, was interesting as well, given that that is a body of water that has a good connection to Mexico and the Mexican border as well.
He loves a good branding game, doesn't he?
I guess he does. The Panama Canal was an interesting one. We love to talk about tariffs, the trade story. The military control bit was quite interesting, because this is where one of the pieces of pushback have come from the inside of the U.S. political agenda, whereas that even though he is very pro-tariffs in that approach, and even though he is leading the Republican Party and you do have that red sweep in Congress, not everyone within Congress supports that approach. The military control bit is, however, though, is under the executive wing. You don't need congressional approval for that. So that is where the viability of some of the things comes into question.
I mean, frankly, some of this around Canada in particular, Panama Canal, Greenland as well, arguably some of this, to some, maybe to many sitting in Canada, will sound pretty unhinged.
Yeah.
How do we sift through what we've been hearing on the foreign policy front from Trump, some of these extreme examples or extreme policies that he's outlining, and get to a point where we understand what is actually actionable and what he's serious about?
Well, we'll start off with maybe the Canadian perspective there, especially given that they're already dealing with their own kind of shift to the right. It's not a big enough shift to say we want to be a part of the United States. In fact, I can't believe I have to reference this poll. There is a poll suggesting that most Canadians oppose that annexation, to no surprise. You can see it on your screen. You also have Justin Trudeau, of course, the current prime minister, maybe not for long as well, given that he has resigned officially, but will be interim prime minister until a new leader is elected, has already said there isn't a snowball's chance that is going to happen where the United States is going to annex Canada. But you mentioned Greenland as well. This is a key piece. It's something he's talked about before. His son, Donald Trump Jr., is currently in Greenland at the moment, talking about investments. The Prime Minister of Denmark even commented on it in Brussels yesterday, saying, look, we hear you. Greenland is not for sale, but we welcome any sort of investments. I thought that was pretty interesting, given that Denmark's biggest export to the United States is actually Ozempic via Novo Nordisk.
OK, one feels these stories have further to go and further to run. Opening trade anchor Kriti Gupta with a breakdown for us on what we've been hearing from President Trump on the foreign policy agenda. Thank you. Now, US stocks got hammered yesterday. This is the market story, certainly, of yesterday, as a sell-off in the world's biggest bond market deepened on speculation. The Federal Reserve will not cut interest rates now until July, amid inflation risks. Let's dive deeper with Bloomberg's Valerie Taitel. Valerie, we had the economic data, the ISM services with the JOLTS data. Walk us through to the market reaction and the pushing back then of that next cut from the Fed.
Look, it was all about this yield rise yesterday. It was that hot economic data that took another leg higher. But it also has been having a global effect, Tom, here in London. The UK gilt market really shaken by what's going on in the Treasury market. Yes, we had that hot economic data. We also had Trump commenting that interest rates are too high. So a little bit of the, I guess, the Fed becoming under pressure from Trump, already getting hints of that in his press conference yesterday. Let's flip on, though, and put this yield rise in perspective, because we're very much eyeing those cycle highs for the Treasury yield. Both the 10-year yield and the 30-year yield, Tom, are 30 basis points away from the cycle highs that we saw in late 2023. But back to that hot economic data, because there's a hint of inflationary forces in that data release yesterday. We had a hot ISM services, but the underlying inflationary component, the prices paid component, hit a 22-month high. We also had the strong JOLTS data ahead of the non-farm payroll report on Friday, showing that the U.S. Labor market is holding up strong. But before we get to Friday's NFP, we have the Fed minutes tonight. A lot of questions over just how close the call was to hold those rates steady, or to cut rates when it comes to that December decision. We'll be parsing those minutes very closely with those discussions about maybe cementing this Fed on pause for the most part of this year. The market is now pricing in the next Fed cut not until July. We also want to know just how much the potential Trump policies played into their economic forecast. Remember, we heard from Powell himself in the press conference saying that some of the members did pencil in some of these economic policies boosting growth. We really want to read through the lines on that one. And then lastly, any reasoning for the upward adjustment to their inflation forecast? They boosted 2025 core PCE up to 2.5%. What drove that, Tom? Is it the Trump economic policies in the background driving these Fed forecasts? We'll be very much parsing through these minutes tonight out at 7 p.m.
OK, excellent setup on what to watch for from those minutes. Again, as you said, 7 p.m. UK time in terms of the Fed minutes on that December decision. Valerie Tantel, our markets reporter, thank you. Here's what else to be thinking about today then. 7 a.m. before we get to the Fed minutes, 7 a.m. UK time, we're going to get German factory orders. So a gauge there in terms of the health of the manufacturing sector, the factory sector of Germany, amid the challenges, of course, of that economy. At 1:30 p.m. UK time, we're going to get a further detail in terms of the labour market of the US after those JOLTS or job openings data came in the highest in 6 months. US initial jobs claims out 1:30 p.m. UK time. So stay tuned for that. We will break those for you, of course. And then, as Valerie was saying, 7 p.m. UK time, the FOMC minutes. Really important, given where traders now think the next cut is going to land. The nuance, the details in terms of that December decision and how that feeds into expectations going forward this year. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. As you can see, Trump dominating the coverage with those comments about Greenland, Canada and the Panama Canal. Coming up, Samsung rises after Nvidia founder Jensen Huang expresses confidence in the Korean firm despite disappointing earnings as it plays catch-up in AI. We bring you the latest next. This is Bloomberg.
I think having someone who is very close to the U.S. industry and to the EV world, I think it should be positive for the industry.
Hyundai Motors' new CEO, the first foreign leader to head up the South Korean automaker, speaking to us exclusively. Now, sticking to Korean companies, shares in Samsung surging after Nvidia CEO Jensen Huang expressed confidence in the firm despite disappointing earnings. For more, let's bring in Bloomberg Asia technology correspondent Annabelle Drulers. Annabelle, Jensen Huang is kind of developing central banker style power over markets. He comments on one company and the stock moves. I can't think of another CEO that has quite the same effect. What exactly did Jensen Huang have to say when it comes to Samsung?
Yeah, well, he certainly knows how to move the markets, that's for sure, Tom. But, I mean, importantly, he gave some hope, and Samsung really needs that right now, especially when you think about the more than 30% slide they had in their market share last year alone. But the hope was really around its HBM product. Now, HBM, I mean, we've spoken about this several times, but it's high bandwidth memory. It's an essential part of AI infrastructure, and Samsung has not been able to get its product certified by Nvidia to date. And this is something that actually Samsung said they'd be able to achieve by the end of 2024. That clearly hasn't happened. But Jensen Huang, speaking at CES, said that he is optimistic that they'll be able to do it and that they're working very fast. And this actually showed up in the results, of course, from Samsung, because we saw a lot more money going into R&D expenses, also into capacity expansion costs, and that again speaks to that HBM story and how much they really need to get this over the line, because we've continued to see that slide in the share price versus what you see for SK Hynix, for instance. It's smaller peer over in Korea, but one that has been supplying HBM chips into Nvidia. And again, just because the AI theme, I mean, it's not going away anytime soon. And this week alone, we've seen, for instance, Microsoft saying it's going to be spending $80 billion building out data centers just in 2025. That sparked a rally in SK Hynix, other key AI beneficiaries. But Samsung has not been able to play a part in this just yet. And that is really what they need to do really this coming year.
Yeah, as you say, they didn't get the certification from Nvidia by the end of last year. Maybe they get it in the first quarter, so we'll be watching for that as potentially a pivotal moment for the company. When it comes to the results, the quarterly numbers, Annabelle, what else stood out to you in terms of what we learned about this chip maker?
Yeah, so these were the preliminary figures. Of course, we get the full sector or group reading later in the month, but they were largely disappointing. So investors already kind of had pretty negative perceptions or expectations for these figures, but still they managed to undershoot those. In terms of the actual numbers, so we saw operating profit coming in at 6.5 trillion won. That was short of the average analyst projection for nearly 9 trillion won, so quite a big miss there. And also revenue came to 75 trillion won, so that was also shy of estimates. So yeah, not great numbers. We actually saw a drop in Samsung's share price at the open that later reversed with Jensen Huang's comments, so just going back to his ability to move the markets. But it is also important to note, given the share price slide we have seen over the past 12 months, a lot of the bad news has already possibly been baked into the share price. Still, though, the company is facing a significant number of headwinds, not just in terms of its abilities around AI and HBM, but there's other factors as well that are important to note for this company. Firstly, you've got the other sectors. You've got things like smartphones, TVs, other appliances. They're continuing to face growing competition. There's also their legacy chips. Now, these are ones that are used to supply to consumer electronics, things like PCs, smartphones. They also are seeing declining figures there. I mean, SK Hynix, for instance, has already started to sort of reduce its production of these types of chips. So yeah, it is what some analysts are saying is one of the toughest moments in the company's history. But the next thing that's going to be watched very closely is Samsung unveiling its latest Galaxy smartphone lineup. That's happening in San Jose on January 22, so a couple of weeks from now. They are saying they're going to make better use of AI, and that's really one of the key themes again for this year, the greater use of agentic AI that's going to be built into smartphones. But yeah, headwinds, that's probably the key takeaway for Samsung.
Okay, great breakdown. Thank you very much. Bloomberg Asia tech correspondent Annabelle Drewlers on the numbers coming through from Samsung and the lift that company has had, at least in the session today, from the comments from Jensen Huang. Sticking with the Nvidia story, shares in that company slumping after a wide-ranging product presentation by the CEO failed to win over investors in the AI chip maker. Huang also spoke to Bloomberg Technology about plans under incoming President Donald Trump, as well as the impact of AI on the gaming industry.
AI is going to reinvigorate the video game industry. On the one hand, for developers, it's going to reduce the cost of creating the content. On the other hand, all of the characters that are in the games are going to be smart characters in the future. So every time you interact with them, they're going to be interacting with you in a much more intelligent way. And so the games are going to be more interesting. The characters are going to be more interesting. The content development cost is going to decline. And that's going to be really great for the industry. And so I think the future is really bright for video games and these virtual worlds, and artificial intelligence is going to really reinvigorate it.
Project Digits. May I pick it up?
Yeah.
$3,000 Project Digits.
Yeah.
A supercomputer you can
sitting
put on
right
your
next.
desk.
Exactly. Could you imagine you're just sitting there just like that? You're working on your PC.
Well, I can't imagine. Why would I need one of these? Probably not me. But how big is the addressable market for this? What is the addressable market?
There are 30 million software developers. There are probably something along the lines of 10 million designers around the world. Probably another 20 million creative artists. Hard to say exactly how many students. I'm going to guess probably a couple of 100 million students around the world. Everybody's going to have to. Everybody's going to have to. Well, they can afford computers, and so if they can afford computers and they would like to have a companion that helps them do AI, this is the way to do it.
Can I just clarify something on it? I think you said on stage Mac OS, Linux, and Windows, but the communication said just Linux.
No. Whatever computer you use, you're literally enjoying how it's going to be used. It's sitting right there, and you just connect to it wirelessly like it's your personal cloud.
I promised the audience I'd clarify that because they're excited. We're running short on time. President-elect Trump has been speaking during the course of our conversation. How imperative is it that you go to Mar-a-Lago and meet with him if Nvidia is America's leading AI company? And will you?
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
A lot of what you outlined on stage last night in the realm of physical AI, I saw Xpeng, for example, in the autonomous driving context. That's happening in China. Like, they are doing a lot on robotics. So I'm going to ask you about tariffs. It's likely this coming administration will be as restrictive on technology export, and tariffs will be a function. How have you prepared for that, Jensen?
Whatever the administration ultimately decides, we'll give them as much insight as we can from our perspective. And I'm sure that the administration will make the right moves. That's in the best interest of our country.
Okay, Nvidia CEO Jensen Huang speaking with Bloomberg Technology co-anchor Ed Ludlow. Later in the show, the US president-elect says NATO nations should hike defense spending to 5% of GDP. But just how are leaders in Europe actually preparing? We're going to hear exclusively from the EU's industry chief, Stéphane Sejourne. That's at 6:30 a.m. UK time. Stay with us. This is Bloomberg. Now, some other stories making the news. Donald Trump's incoming special envoy to the Middle East says negotiators are on the verge of a deal to secure the release of hostages taken by Hamas in its war against Israel. At a press conference at his Mar-a-Lago resort, the US president-elect repeated a threat that if the hostages were not released before his inauguration, Hamas would pay a price. A fast-moving wildfire has ripped through an affluent area of Los Angeles, destroying homes and forcing thousands of people to evacuate. About 30,000 people were ordered to leave their homes after a bushfire erupted in the Pacific Palisades community, causing panic and traffic gridlock. The blaze was also almost 3,000 acres and remains uncontained. Coming up, we're going to hear exclusively from the EU's industry chief. Stay with us for that interview. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks follow Wall Street lower as China ramps up support for the yuan. Traders now betting the Fed will not cut rates before the second half of this year. We're going to get minutes from the central bank later today. Samsung gaining after Nvidia's CEO expresses confidence the Korean company can resolve its tech problems despite a profit miss. And President-elect Donald Trump lets loose on foreign affairs, threatening to absorb Canada, seize the Panama Canal and take control of Greenland. Let's check in on the markets then. There was a rout for US stocks yesterday. Nasdaq 100 fell around 1.8%. The S&P fell around 1.1%. The futures suggest there's going to be a bit of relief coming through for US stocks today after the sell-off of yesterday. European futures pointing lower by 0.3%. FTSE 100 is currently stable and unchanged. S&P futures, as I mentioned, pointing higher, up 0.2% after yesterday's selling. Similar picture for the Nasdaq 100. This was down to stronger jobs data. The sell-off as well, a drop of a little over 6% for Nvidia. So a big drop in terms of Nvidia after it reached a fresh record high the previous day. Some selling pressure coming through Nvidia. That weighed on the Nasdaq 100 and the broader stock market, of course. But it was the jobs data, JOLTS. That number came in, the highest number of job openings we've seen for about 6 months. And then the prices paid within ISM services data out of the US suggested that there is possibly a tick up in inflation coming through in the cards. Let's flip forward and look cross-asset. You saw a sell-off of treasuries as a result of that data. That sell-off has eased in today's session. Currently, the 10-year is yielding you 4.67. Euro-dollar at 103, strengthening by 0.1%. Bitcoin back below 100,000 at 96,000. As you can see, down 0.4% in the session. And Brent at 77.47, up 0.6% in the session. Now, Donald Trump says NATO nations should spend the equivalent of 5% of GDP on defence, more than double the current target. No NATO member, including the US, currently spends close to that level. The US President-elect's comments come after Bloomberg spoke exclusively to the EU Commission's Executive Vice President, Stéphane Sejourne, about how the bloc plans to respond to the new US administration.
Europe will remain an open market and will not become a closed one. There's no gain in a trade war. However, Europe cannot be the only continent open to global overcapacity. Across the globe, markets are increasingly protective, with state aid marking our industries uncompetitive. This must be addressed. We have both offensive and defensive trade instruments that we must activate as part of a comprehensive economic strategy. This marks the end of European complacency or excessive openness. We need to protect our industries when they are not operating on a level playing field.
And one of the great risks to the European economy and indeed to European industry will be tariffs that have been promised by Donald Trump, obviously something that you're paying very close attention to. I want to ask specifically about steel tariffs, because if there is no deal by the end of March, as you know, there will be steel tariffs between the United States and Europe. Are you prepared to support European industry if that comes to pass?
Regarding steel, there is no automobile or wind power industry without steel. So if we want to be able to build automobiles and wind turbines in Europe, for example, for carbon neutrality, we need a European steel industry. We will have a plan to protect the steel sector from global overcapacity while ensuring competitiveness. I'm prepared to explore both defensive and offensive actions with my colleagues at the Commission. This is a dialogue that we will have at the Commission. I still hope to convince the next U.S. administration that we have everything to lose from a collective trade war. Europe is an economic power with 450 million consumers and must be viewed as such. Our goal, our responsibility, is to be united as 27 nations to be able to negotiate.
OK, the EU Commission's Executive Vice President, Stéphane Sejourne, speaking there to Bloomberg's Oliver Crook, who joins me now from Brussels. Ollie, listening to that, it's pretty convincing from Stéphane Sejourne that he understands the issues that Europe faces, that Europe is girding for the pressures that could come from this Trump administration. But what do we know about a concrete plan to support European industry that he acknowledged is under threat?
Yeah, so listen, Tom, I mean, I think everyone is sort of well apprised and sort of agrees on a lot of the problems that Europe faces. I think that really the difficulty comes in trying to solve those problems, from kind of the methods and the ways that you sort of approach it, and if there is sort of the political unity to do it. So again, this is a new job that has been formed that he is now embodying, the Executive Vice President for Prosperity and Industrial Strategy. You know, for shorthand, we can call him basically the Competitiveness Commissioner. And what I got from the impression of talking to him, I will say that there is still not a huge amount of concrete detail on a number of the points in terms of where they're going to go, but I think that we sort of got a good insight into kind of how they're thinking about the problem. What they're looking at for the Europeans right now is bridging this sort of issue with the sort of uncompetitiveness of past industries, i.e., you know, industry from varying kinds, whether it's steel, aluminum, all that sort of heavy stuff, chemicals, but also the auto industry, and bridging that into the sort of industries of the future, basically supporting the old industries in Europe so that they don't just sort of die out, but then at the same time also trying to promote the industries of the future. That will be sort of more in terms of clean technology, sort of energy, but also medical and those sorts of things, and of course technology, which is something we didn't actually talk that much about, which I think is sort of a big sort of omission here, because that is going to be one of Europe's great strengths, a very educated sort of labor force that knows a lot, has a lot of expertise, bringing that into sort of the productivity discussion of technology. One of the main questions is, how are they going to pay for all this? Literally, how is it going to be done? Are there going to be more sort of funds that are set up for the Europeans to distribute among member states? And critically, his whole point is he's going to implement the Draghi agenda basically all the way through. One of the things that Mario Draghi calls for in his competitiveness agenda is a spending of almost €1 trillion every year, 800 billion euros every single year. So I asked Stéphane Sejourne, how are they going to do that? Can they do that without joint debt? Have a listen.
Yes, it is realistic because, first of all, if we add the competitiveness policies of each member state plus the European budget, we are not very far from the investments that need to be made. I will push to implement the whole Draghi report and nothing but the Draghi report, all the components, including the investment aspects.
So for the moment, obviously, since it's such a sticky issue, the question of joint debt sort of not really sort of rising to that. But I think what I know he is looking at is trying to unlock additional funds that already exist within Europe. There could be potentially new funds established in terms of how to disperse that money. But we're also going to get this sort of industrial clean deal. That is a new deal that the EU is going to put out in the month of February. We're going to get a little bit more detail on precisely what are the actual instruments, what are the actual policy tools that are going to be used to boost that competitiveness here in Europe.
So, Ollie, you're talking there about funding potentially being a roadblock to this project for the EU, to these ambitions. What are the other potential headwinds to getting this competitiveness agenda underway in a kind of comprehensive way and across the line, ultimately?
Yeah, so listen, Tom, I mean, I think some of them are sort of priced into the nature of the EU, right? This is a very sort of slow-moving organism. It requires a lot of consensus. So I think that at a time when industrial strategy is so critical, and you see, the Trump administration moving pretty fast, I mean, it hasn't even started yet, right, on a lot of sort of policy initiatives, that Europe's sort of slowness is going to be one of the sort of the big issues. Another issue that you also have is the question of consensus right now, right, Tom? I mean, we're talking about the political sort of threads throughout Europe. I mean, Stéphane Sejourne is talking about one of the most important things that you require right now is European unity. You do not have European unity right now, not just among the 27 member states, but at the national level. You look at what's going on in France, you look at what's going on in Germany. I mean, I think that we can't also overstate the importance of what has happened in Austria. What we see in Austria is not just the sort of rise of the far right. What you have is basically now at the head of a member state, sitting at the table of the EU 27, is somebody potentially, if he is Chancellor, the leader of the Freedom Party, Herbert Kickl, who is very, very Eurosceptic. He sits with Viktor Orban in the sort of the former ID group within the European Parliament. This could cause a lot of problems to getting a lot of these joint initiatives moving forward. And this is something that's going to be a sort of major concern, to say nothing of the fact, Tom, that even those who are a little bit more pro-Europe, say Olaf Scholz, for example, they are not willing to allow things that are, again, what is one of the things that Mario Draghi is recommending, getting rid of basically national champions in favor of European champions. And this is one of the questions I put to Stéphane Sejourne. How do you get the rest of Europe on board in order to get these companies that are not just sort of big on a German or French level, but on a European level? Have a listen.
We obviously need companies. This is true in the telecom sector, which today is 27 markets. We need to work on building a telecoms market at the European level. This applies to banks. Banking union is a real challenge for Europeans and the banks. In politics, when you discuss these subjects with member states, they often agree. When you go into detail, it is often more complicated. So now it is a question of political will.
And so of course, the other question, I think, Tom, before everybody here is whether is also the influence of Donald Trump. Obviously, tariffs and a sort of economic policy against Europe could be massively damaging to the economy and also massively damaging to this idea of sort of European competitiveness. The question is, does Trump actually harm Europe or actually help Europe? I think that's sort of an interesting question to kind of get into.
Well, Ollie, on that point, I mean, look, he's been taking aim in this press conference at everyone from Canada to the Panama Canal to Greenland and Denmark, at not even ruling out military force, ultimately. And, you know, we don't know how much of that is hyperbole and how much of that is real intent from the incoming president. But we can assume it's not going to be long before incoming President Trump, turns his target, his ire, on Europe. We know Europe has been a bugbear for him, for rational reasons and arguably irrational ones. Is he a unifier for Europe then, or is he going to accelerate those divisions that you outlined for us?
I think that's a really interesting question, Tom, and how this plays out, I think, is going to be fundamental to the future, not just of Europe as an economy, but as the European project, right? I mean, I remember when I sat down with the Danish Prime Minister in September, so even before the election in the United States, and I had asked her, I said, just want to confirm with you, is Greenland still not for sale? You know, it was a little tongue-in-cheek. She sort of, took it pretty badly, actually, saying that basically, the better less said about this, the better, because, we've already answered this question. This question is not answered, for example, in the mind of Donald Trump. So I think that the interesting question is this going to drive the Europeans further together? Do they sort of come to this realization that actually, as a bloc, they have much more sway, much more power, much more might in order to negotiate with Donald Trump? Or does it actually sow the seeds of division? And this, Tom, brings us exactly to sort of Elon Musk and what we're seeing in terms of the sort of politics here in Europe, basically advocating, certainly in Germany with the AfD, a party that now has more than a fifth of the vote in Germany that wants to leave the Eurozone. So if you get into a position also with bilateral discussions with, say, Hungary, between the United States, the Trump administration, and Viktor Orban, could that actually drive wedges? Could you even be in a situation where they're starting to talk about trade deals unilaterally? Again, this is somewhat speculation, but I think that this is stuff that the Europeans need to start thinking about and start to think about a unified approach, particularly also the question of NATO. He wants to see 5% defense spend here with the NATO countries. Is this, again, something that could bring Europe together, or is this something that is going to put even more stress on the cracks that are clearly appearing at the national level, but also at the European level here on the continent?
Yeah, the cracks are there, aren't they? We'll see if any of those questions will be answered in the weeks, months and years ahead. Poland is stepping up its defence spending, is arguably the closest to that 5% level, but still a ways from that. Ollie Crook, thank you very much indeed with the details in Brussels. Really fascinating conversation there with the executive there, essentially leading the competitiveness charge for the Eurozone. Now, some other stories making the news this Wednesday. The sister of Sam Altman has accused the OpenAI chief executive of sexually abusing her for almost a decade. In a lawsuit filed in federal court, Ann Altman alleges that her brother abused and manipulated her while they were growing up in Missouri in the late 1990s and early 2000s. In a statement on behalf of himself, his mother and brothers, Sam Altman called the claims utterly untrue. A British politician has criticised Shein and a Shein representative for failing to answer questions about the firm's working practices. During a parliamentary hearing, Business Committee Chair Liam Byrne said he has, quote, almost zero confidence in the fast fashion company's supply chain. This after Shein's representative declined to comment on whether its products contain cotton from China's Xinjiang region. Shein is targeting a potential IPO in London later this year. OpenAI rival Anthropic is said to be in advanced talks to raise $2 billion in a funding round at a $60 billion valuation. Our sources say Lightspeed Venture Partners is leading the round. Anthropic is one of many startups raising billions amid the hype over generative AI. Amazon said in November it was investing an additional $4 billion to boost its stake. JP Morgan is said to be planning to end its hybrid work option for employees, requiring everyone to return to the office 5 days a week. Welcome to our world, everyone. Sources say the bank could announce the change in the coming weeks, replacing an existing 3-day mandate for many of its workers. JP Morgan employs more than 300,000 people globally. Coming up, new year, new bond issuance. Global credit markets have seen strong demand as investors are willing to settle for low-risk premiums. We can get the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday, everyone. Now, borrowers are flooding global debt markets at an unprecedented pace as they take advantage of demand from credit-hungry managers flush with cash. For more on this, let's bring in Bloomberg's Valerie Teitel. What is this? Is this a seasonal story? What's driving this corporate debt issuance?
Well, there's two
and
parts.
Demand.
Exactly. There's two parts to this. It's not a surprise that we do get a flurry of corporate debt issuance to start the year. January is normally a very busy month for those on the bond desks putting these bond issuances together as these corporates try to raise cash for their needs for the year. So that's not surprising. What is surprising is that some of these corporate bond spreads are at historic tights. So there's not a lot that the investor gets from buying these corporate bonds, but they still have appetite for it. And what's driving that? Well, it's the fact that defaults, the risk of defaults has really dropped recently. You know, if you think about where we were last year, we were talking about the U.S. having an economic slowdown, perhaps that becoming a global problem, and then you see corporate defaults rising. That has really gone to the wayside now. We're not very much worried about these defaults. So even though the yield pickup versus government debt to buy corporate debt is at historic tights, investors out there are still seeing some sort of return, some sort of juice in that for them.
Okay, so investors not seeing too many risks within the credit market. What about the sovereign debt market? We've had a flurry of governments issuing debt here in the UK, 30-year gilts being issued this week as well. How has that been absorbed by the market?
Like, it's very much a different picture when we talk about the government debt supply, this debt deluge that we're due to see from governments globally, the UK being one of them, trying to issue the most debt that they have ever outside of the pandemic. The situation is very much the same in the U.S. And then if you look at France as well, this growing, swelling deficits, the need to fund it. So it's a very different story when we talk about governments because, especially here in the UK, because if we focus in on governments who have economies that aren't growing, it is a problem because you start to question this fiscal discipline. How much room do these governments have to borrow when their economies aren't growing and they're facing, funding themselves at 5%?
You're talking about the UK. You're talking about the UK. So what are the options for Rachel Reeves?
It's going to be an interesting one, Tom. We have until the spring, maybe, for them to make a big announcement. We have the spring budget on March 26th. But the market is really tempting them to do something further. And that could be another round of tax hikes in order to raise cash to help her meet her fiscal rules. The problem with that, though, is we have a very huge debt burden already here in the UK. And we could get to a situation where, look, tax hikes are going to further hamper economic growth, which already is back to back at 0%. So you have an economy not growing. You have the interest rate, this debt cost, nearing 5%. You start to wonder whether, the UK government can fund itself in a long-term basis. You have, if we focus more on the interest paid just to pay the coupons on debt, it's a big percent of GDP. And if you don't have GDP growing, your debt stock continues to pile up and continues to pile up. So it'll be a very interesting situation across Europe, especially here in the UK, to see how these governments manage this debt pile.
Yeah, with businesses already, of course, working through and contending with that higher tax increase as a result of national insurance contributions on employees and the payments there. And that has, of course, not gone down well with the business community in the UK. Bloomberg's Valerie Teitel, thank you very much indeed, walking us through what's happening in the credit markets and the sovereign markets as well, with the challenge here for the UK. There's plenty more coming up. Stay with us. This is Bloomberg.
markets have very much focused on the fact that, you probably will see somewhat more inflation in the short term. They've taken that as quite hawkish, but it's double-sided. I mean, you have it, on the one hand, you have an inflationary impact. On the other hand, there are also some risks to markets if we were to see a more aggressive tariff posture, which of course is a risk.
The Goldman Sachs chief economist Jan Hatzius speaking to Bloomberg there. Let's focus on the data that came through yesterday that provided that jolt to the Treasury market once again. Strong data out of the US, the ISM services gauge, firmly in expansionary territory. The number coming in at the headline basis, and that's the white line that you see on the screen here, 54.1. So again, services firmly in expansionary territory. Here's what stood out, though. It was the prices paid, 64. That's the highest level. That's the biggest print in terms of that number since March. You have to go back to March of 2023 to try and see prices increasing that much within the gauge of the ISM services. Bloomberg Economics says this is partly due to activity picking up and being pulled forward in anticipation of Trump tariffs. And Bloomberg Economics says that will be the key driver of services going forward. But it was this data point that led to expectations from markets that maybe the Fed's going to have to push back its next cut, possibly until the second half of next year. Talking of which, let's flip the board and have a look, because today we're going to get the minutes for the December meeting of the Fed, 7 p.m. UK time. Hopefully some more detail, some more colour in terms of the thinking. Fed officials increasingly in the last few days have been coming around to this idea that they can be cautious and take their time in terms of thinking about the next cuts. And again, markets now not pricing the full next cut, 25 basis points, until July of this year. You've seen the split between the hawks and the doves, and we'll see how that changes on the back of the minutes that come out later this evening. The corporate story of the moment, linking again to Nvidia, is Samsung, because this stock moved just on one comment from Jensen Huang, who's taken on kind of central banker style power over these markets almost. He made a comment about them working fast in terms of developing high bandwidth memory that can be certified by Nvidia, and you saw the stock jump on the back of that. But broadly, in terms of the earnings, it was a big miss for Samsung, and it's a reminder of just how heavily exposed they are to the legacy side of this business in terms of smartphones, in terms of chips for TVs, the fact there's a lot of competition coming through from China, and that just underscores the need for them to get that high bandwidth memory certified by Nvidia so they can really play a role in the AI revolution that they have so far missed out on. Today at 5 p.m, by the way, UK time, we're going to speak exclusively with Gary Gensler as he prepares to leave his post, contentious as it was, as chair of the US Securities and Exchange Commission. The opening trade, though, is up next. This is Bloomberg.